Over half of Australians are at risk of missing payments and mortgage stress. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because I'd like to have a look and a talk about this article from Australian Broker. They're discussing a new study from the Financial Brokers Association of Australia. Over half of Aussie borrowers in danger of mortgage stress if rates keep rising. Now, our beloved Reserve Bank Governor has promised us that rates won't rise until 2024. Although if we just look at, maybe this one chart here of the RBA's ability to predict or forecast wage price growth, well, none of us trust them. None of us trust them. Let us know in the chat how many of you actually fix your mortgage or were encouraged to fix your mortgage once you heard those words from our Reserve Bank Governor, if anything that encouraged me. So let's look at this. Over 50% of Australians with a mortgage would be unable to meet repayments if there was a 1% rise in interest rates, according to a new study from the Finance Brokers Association of Australia. The survey asked Aussie borrowers how prepared they were for a $300 increase in repayments, the equivalent of a 1% rise in interest rates. 56% said they would need to look at refinancing, while a huge 75% said the rate rise would put pressure on their finances. Okay, $300. We're talking a month, everyone. So I'll bring some stats or some Excel here. Here we have a $580,000 mortgage, which is the average mortgage size. You're going from 2.79% to 3.79%. 3.79 seems a bit more realistic. All these low rates, it's unnatural. So we're talking an increase of $319.15 a month. That's a 13% increase. $300 a month, that's a decent coin. Okay, you have to come up with that coin. That's going from $2,300 to nearly $2,700. You're within 10% of $3,000 there, so it's decent monthly costs on a mortgage. Now, if we go further down for $800,000, these are people that may have just jumped into the market. For them, it's an increase of $440 a month. That's another $100 a week. That's someone renting out a room in suburbia, maybe a bit more closer into the city. That's decent money. That's a fair bit of food a month. $440. So, this is what you have to plan for. When I've got people getting in touch with me asking advice on when to buy a house, and all I say is, well, number one, don't ask someone on YouTube, but plan for worst case. Do the maths, do the sums. Think about what you would have to go through if the worst case happened. If your partner got fired and interest rates went up and just shit hit the fan, it all went wrong. Plan for that. If you can handle that, if you've got buffers in place to deal with it, then that will make your decision for you. Just plan for the worst and hope for the best. But there you go, everyone. So we're starting to see discussion of rate rises, which is going to have a significant impact on people, living their day-to-day. And, there may not be a risk of $400 a month. May not be enough to tip someone over the edge. They're not going to be forced to sell. They're not going to run to the bank in tears. But they're going to be living under some greater stress. They may suffer from housing stress. And let's bring up that definition here, everyone. But it's going to have a real impact on their discretionary spending. So, housing stress is typically described as lower income households spending more than 30% of their gross income on housing cost. Lower income. Let's look at the breakdown of who we're talking about here. This is the households that we've got. And I'll turn off this. Here, higher income over $2,000 a week. Middle, just a touch under $1,000. Low, adjusted low income, $433. So $440 a month. If you're sitting up here, it's not going to make as much of a difference if you're at lower income households, everyone. Australia is, our economy is having a K-shaped recovery. Certain sectors are taking off and others aren't doing as well. Let's have a look. Let's get back into this. Furthermore, 57% said that they would not be able to meet repayments if rate rose by just 1%. That includes 80% of single parents, 70% of baby boomers, and 71% of people living in remote areas. Now, that 80% single parents, that's an interesting one. Because remember, those 2% deposits that the government was encouraging people to take, they were guaranteeing those mortgages for single parents to get them into housing. 2%. Now, it's all well and good if rates aren't insane, and money is so cheap now. Now, I'm hoping none of those people are going to get caught in this. I really am, because a lot of them, the buffers there on the repayments, I think I don't think they could even borrow this much, or maybe they could. Maybe they could. I'd have to check. I think it was 700,000. Well, let's type that in here. There you go. You're talking another, well, yeah, bugger, another 400 a week. For a single parent, it's even going to be harder on a single income as opposed to a double income. I mean, it's my family. We're a single income household. So the cash rate is, well, not really. Rachel works in the business, but it's kind of different for us. The cash rate is expected to rise for the first time in over a decade at some point towards the end of 2022 or even early 2023, according to fixed rate rises already made by major lenders. Many Australians are clearly on the brink and sleepwalking into disaster, living in the false hope that rates will stay this low, said FBAA CEO Peter White. Okay. How many? 57%. 56% would need to look at refinance. Oh. See, this is the thing with your mortgage, or with your personal finances. People will often not really take a look into it or will ignore it until trouble mounts, until something big happens. And then that may be the slap across the face you need to get your situation under control. For me, it was we had a year's worth of work, a big, huge project that we worked on disappear. That was the big slap in the face that I needed to get everything under control and to realize how much money was just filtering away. And to get it under control, maybe this is the circumstances that other people may need to go through. I'm hoping. The survey is a wake-up call and shows that even a small rise in rates, which is looking more likely next year with rising inflation, could be catastrophic for our nation. Shockingly, 57% of people paying a mortgage or rent answered not at all, and we are talking about an increase equivalent to only 1% based on the average home loan. 1% is not a large increase. It will happen, and with the RBA recently deciding not to intervene to stop increasing yields on 3-year government bonds, it will likely happen soon. My message to Australians is that we must be better prepared. Oh boy, I mean, just think about all the ABC articles we've looked at about people bitching and moaning, blaming others for their circumstances, and it's refreshing to hear an article here where people are advocating for personal responsibility and being prepared. Or is it going to be calls for mortgage keeper and government intervention? Maybe they think they're going to get mortgage holidays again. The housing market has soared, and there is a reasonable chance will undergo a correction, meaning that those with low deposits who have stretched themselves to make large repayments could see themselves with negative equity, owing more than the value of the property. At a mortgage increase, they can't pay, and there could be a lot of people in real trouble. Now, let's have a bit of a talk about that. Now, here's the thing. We don't have the situation in America where people can just take the keys, put them in an envelope, send them to the bank, and abandon the property. People are going to fight tooth and nail to hold on to their property here in Australia. They will do whatever they can to hold on to it. So we'll have to see. I mean, what this is telling me is not that people are right at the brink, that they're going to tip over. It's that probably a lot of people are completely stuffed up their finances. You know, they've got no idea what they're doing with their budgeting, and they may need to get it under control, and they may need to cut out all those luxuries. This is telling me that consumer spending could take a hit significantly once we see interest rates rise. You know, the new car, the new toys, the new holidays, the eating out, the smashed Av. And then that will flow through to other parts of the economy. And then we could be hitting into a potential recession. And then, of course, that could potentially snowball on to having a greater effect on housing. Prices could go down. But what would happen, what I suspect, is we'd get rampant government intervention. You'd get the government just throwing money at some stupid scheme to intervene, to prop up housing and the economy. Forget the debt. What do you think, everyone? What do you think would happen? Let me know in the comments down below. Am I becoming too cynical? Have we seen too much government spending now? Maybe it's going to change. We've got an election. Maybe ScoMo won't get in. I mean, if Labor will get in, they'll spend just as much, won't they? So what's the difference? So we'll have to see. Let me know, guys. Check out this previous video about house prices or interest rates rising with some of the other banks. They're all starting to creep up, and now there's more talk and concern that it's going to have an impact on all of us. Take care, everyone. Have a great day, and I'll see you in the next episode. Bye for now.